Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin in the United States, where the annual Economic Symposium takes center stage in Jackson Hole, Wyoming. This event, which is the most important globally for the financial world, is touted as the Davos of central bankers. Front and center here is U.S. Federal Chairman Jerome Powell, as he is set to deliver what may be his most important speech of the year. This as investors are hungry for clues on the pace and the size of the Fed's potential rate cuts. And Powell's address is expected to offer much needed guidance on policy direction. This comes as the minutes from the central bank's meeting last month shows that a vast majority of policymakers believe that the U.S. Central Bank is now ready to start easing interest rates beginning next month. Here at home, Prime Energy Resources of billionaire Ricky Razon moves to extend the life of the Malampaya gas field. Prime Energy has awarded a $180 million contract to Dutch firm Allseas Netherlands to install a pipeline that will link the two new wells to the Malampaya shallow water platform. While the drilling for these new wells will begin next year, fresh gas supply from them is expected to come in about a year after, by 2026. The Malampaya gas field is an important source of energy for the power sector, as it accounts for roughly 20% of Luzon's electricity requirements. Electric utility firm Meralco continues to beef up its renewable energy portfolio. Meralco says that their subsidiary, MGen Renewable Energy, or MGreen, is investing in a 450-megawatt solar project in Pangasinan. Singaporean firm Vena Energy currently owns the project, which is expected to come online by next year. In addition to this investment, in 2023, Meralco secured a majority stake in SP New Energy Corporation, the developer of one of the world's largest solar firms. The Department of Information and Communications Technology, or DICT, wants to step up its fight against cyber threats. DICT spokesperson Renato Paraiso says the agency is asking Congress for confidential and intelligence funds so that they can hire hackers as consultants. Paraiso, however, explains that the DICT has to find creative ways to fulfill their mandate, as hackers cannot be hired in plantilla positions, citing certain restrictions. This comes after government websites, including the Senate's and a microsite managed by DICT, were recently hit by hackers. In other news, cash rewards continue to pour in for two-time Olympic gold medalist Carlos Yulo, with the latest one coming from no less than businessman Manny Pangilinan. The athletic advocate, through the MVP Sports Foundation, has awarded Yulo 10 million pesos for his historic win in the recent Paris Olympics. Meanwhile, bronze medalists Nesty Patecio and Ira Villegas received 2 million pesos each, while their coaches also received cash incentives. A renowned sports patron, Manny Pangilinan, vows to continue supporting Filipino athletes through to the 2028 Olympics in Los Angeles, California. Beautiful, bright, and alive. That's how locals describe a night out in Manila. Our nation's capital is now considered as the second best city for nightlife in the world. A survey by global media company Time Out gave Manila an impressive 78% rating, thanks to the city's affordable and vibrant nightlife scene. Time Out cites Manila's diverse offerings, from the night markets in Divisoria to the bustling districts of Poblacion in Makati and Bonifacio Global City. The inaugural 2024 Nightlife Ranking surveyed thousands of residents in major cities worldwide who rated nightlife based on budget and quality. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Over in Wall Street, U.S. stocks see cautious trading as investors brace for Federal Reserve Chairman Jerome Powell's comments later on tonight. The Dow Jones Industrial Average shed 0.4%. The S&P 500 gave up roughly 0.9%, while tech stocks felt the brunt of the selling pressure, with the Nasdaq dropping 1.7%. Now, over in the United Kingdom and in Europe, equity markets ended flat. London's FTSE gained 0.1%. Germany's DAX index inched up by 0.2%, while Frank's CAC 40 closed unchanged.
What we think investors should be listening from Fed Chair Powell is a tone that supports a trajectory of rate cuts at a pace that is reasonable, that would support a soft landing type of path for the economy. If they hear anything that seems a little bit more concerning, and that might be supported by the support of a 50 basis point cut, I think participants could get a little bit jittery that the Fed is seeing something in the data that maybe we aren't, in terms of the trajectory of the data in the economy.
The Philippine stock market is closed today for the holiday. Now, just to recap, the PSE index ended the shortened trading week up by 1.7%, closing well above the 6,900 level. Now, meanwhile, at the foreign exchange market, the peso strengthened to a fresh 4-month high to finish the week at 56.33 against the greenback. That's higher than the previous close of 56.5. Now, to get a better sense of where we are and where we're headed, we have with us Ron Acoba. He is the Chief Investment Strategist for Trading Edge Consultancy. Good morning, Ron, and thanks for being here with us.
Good morning, Maggie. Thank you for having me.
Okay, Ron, we're at 69.62 now, just 38 points away from the 7K mark. We're just there. The market at this level, what does it tell you?
Well, essentially, over the past 3 weeks, the market has essentially reversed its course after sliding all the way to a low of 6,400, rallying to as much as 7,000 a few weeks back. Essentially, investors are already positioning ahead of the potential cut of the U.S. Federal Reserve, which will happen perhaps in 3 weeks. In 3 weeks' time.
Okay, so much is hinged on the Federal Reserve cutting interest rates. I mean, the Bangko Sentral ng Pilipinas was a little bit ahead of that curve. What if? It's a remote possibility, but what if it doesn't happen, Ron?
Well, if you look back to early this year, same thing happened. Markets across the globe, especially the emerging markets, have rallied in anticipation that the Fed will start to cut its rate as early as March. In fact, if you look back in terms of how the markets were pricing in the number of cuts for the entire year of 2024, back in January, people are talking about as much as a cut of up to as much as 2% cut, which is rather big, which precipitated to a huge rally that brought the PSEi, for example, from a low of 6,000 to a high of 7,100 in just a month or 2 months since the last quarter of December. But obviously, March came and passed, and because of sticky inflation in the U.S. and locally, we didn't see any cut. And obviously, the delay caused markets to crater once again to as low as 5.9 at one point in the middle of this year.
Okay, going back to those rate cuts, especially the Fed's, and the impact that they have on global monetary policy. The PSE index has rallied about 10% since falling to the 6,400 level. Now, this is on fears that the U.S. would hit a hard landing. Now, those fears have eased, especially as the Fed is poised to cut interest rates by 25 to 50 basis points, and that's going to spur growth. Historically speaking, Ron, what effect do U.S. interest rates have on global monetary policy, particularly on ours, as the Philippines is closely tied to the U.S. in this respect?
Well, it's a benchmark of all central banks for the interest rates that are being set by the U.S. Federal Reserve. Between the two, the U.S. and the Philippines, for example, the U.S. is a developed nation. Obviously, their sovereign bonds, being AAA, wouldn't charge as much. Contrary to the Philippines being an emerging market, riskier market at that, investors would require a premium Philippine on Philippine investments. Having said that, interest rates between the two, the Philippines should have a higher interest rates. So the 1 year interest rates of the U.S. at as of now is at 5.5%, which is the benchmark of the U.S. Federal Reserve. The benchmark interest rates of the BSP, after being cut by 25 basis points recently is now down to 6.25%. So the difference between the two is very thin of only 75 basis points, which tells us that the premium that the local debt are offering over the U.S. counterpart is not that much. So there has to have some level of margin between the two, and that's why following the route of whether the U.S. Federal Reserve will maintain or cut is actually important, which will direct how local assets will also perform.
Yeah, not just how local assets will perform by way of its impact on foreign investors, and
Yes.
we really need that to move the market. We want to use this as a platform for education too. So Ron, can you tell us, taking a look at the action from foreign investors, they don't hold for a long time. They're pretty much, they just trade over the short term because what they earn in equities, they can lose from the peso. Now, can you explain why the volatility in the peso is a deterrent for foreign investors looking to come in equities?
Well, first and foremost, more than 50% of the daily fund flows are coming from the foreigners, and obviously, the funds that the foreigners have are denominated in dollars. So if they are to come into our market, their dollars, their investments, they have to exchange into the local currency for them to be able to purchase whatever asset they choose. But at the end of their holding period, for them to, if they choose to realize their position or to withdraw their investments, they have to revert back and exchange whatever local investments back to the US dollar, right? So a weak peso and more importantly, a volatile exchange rate is actually a deterrent. Let me give you this example. For example, a foreign fund wants to come in, buys $1 million worth of asset, let's say at 50 pesos, per dollar. So if over a period of time, maybe 2 to 3 months, their local investments rises by 5%, for example. So for us, it's no problem. We'll probably realize a 5% increase in our peso investments because there's no foreign exchange risks or whatever. But from a point of view of a foreign fund, what if during that particular period, while the local investment rises by 5%, the peso depreciated by say 10% against the US dollar? So even if their peso investments rose by 5%, but if the peso depreciated by 10% over the same period, they will still realize a loss of 5% in dollar terms. That is why a weak peso and more importantly a volatile exchange rate is actually a deterrent for foreign funds to come in.
Yeah, they've got to know what they're doing because the upside's high and the downside can be pretty big as well. So Rod, what are the investment trends you expect to see given a looser stance on monetary policy in the US and here at home, especially with the peso? We just closed at 56.33 yesterday against this backdrop of the trading range of the peso and against where we stand on the equity side. What are the expectations for how investors position themselves?
Well, so far, for example, looking at the peso-dollar exchange rate, you've mentioned the peso have already appreciated down to 56.3 or 56.4 at the moment, from a high of almost 58 a couple of weeks back. This alone tells us that in global investors are already positioning for for a weaker dollar, precisely because of the impending cuts that are on the table, starting perhaps on September. This obviously this will be benefit in terms of foreign funds looking to invest into our country, as we've discussed earlier, and also aside from appreciating peso, or at least a stable peso now, a cut in interest rates would also boost sentiment in riskier assets. More importantly, finally, in emerging markets like ours.
All right. Thank you so much, Ron. Unfortunately, that's all the time we have for today, but we'll catch you again next time to expand this discussion. All right. That was Ron Acoba, the Chief Investment Strategist for Trading Edge Consultancy.
Thank you, Maiki.
Now we're taking a quick breather. Basis Points will be right back. Welcome back. Let's check on the business headlines in the major news websites. On Inquirer, the Philippine Chamber of Commerce and Industry wants the government to streamline trade policies amid a widening trade deficit and a renewed push to support MSMEs. On Business World, the Quezon City government plans to boost tax incentives for businesses that invest in key priority sectors. And on CNBC, shares of fitness equipment maker Peloton surged 35% as sales increased for the first time in 9 quarters. And before we go, let's take a look at the World Robot Conference, which is underway in China. At this event, the latest humanoid robots and robot dogs are stealing the show. This year's exhibit attracted 169 companies and more than 600 innovative products. Though mass production remains distant, China's top robotics firms believe that someday, hopefully soon, these human-like and dog-like robots will be available to anyone and everyone across the globe.
As most strategists also confirm, not only within China but internationally, the humanoid robot market is going to explode and is going to become maybe 10 times the size of the EV market. So we are looking at numbers that are maybe close to 2 robots maybe per person as we move forward. So we have a great potential there.
And that's it for Basis Points. I'm Maiki Oreta. Have a good long weekend and see you on Monday for news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.